All right, guys, welcome back to another YouTube video. Today we have Julia with us today. Julia, thank you for being willing to do this.
Thank you for having me. Hello, my name is Julia Ibrahim. I'm a CPA, a CIA, and I run an accounting firm that specializes in e-commerce. We help e-commerce businesses to start on the right foot, get their records straight, and save the most in taxes. So my background is in government auditing as well, so I'm very familiar with what type of records you would need and how to reduce your audit risk. So this is not a legal advice, it's just my opinion. It's just based on my experience working with e-commerce sellers, working for government as an auditor. So just getting out.
Yeah, no, that's fair. You got to throw it in there, right?
Yes.
So from your experience, when people are starting in e-commerce, especially in the first, let's say when they are initially starting out in the first, year or two, what do you see as common mistakes and what do you suggest people put in place when they're starting an e-commerce business?
Okay, so first of all, when you're just starting out as an e-commerce business, it's not mandatory, but it's recommended that you form a separate business legal entity, such as an LLC or a corporation. That would depend on your goals, on your budget that you have in place. But definitely, my recommendation is to have a separate legal entity. You would need to get an EIN number from IRS. Make sure that you select the business structure and the business, the type of business that you're doing correctly, because that may lead to other mistakes in the future if you don't select it the right way in the first place. I would also recommend to have a separate business account if you cannot do that in the very beginning. Have a separate personal account that you use just for business, because commingling funds is a big red flag for IRS, and for overall it's going to just make your life so much harder to sort through in the end. Also, when you're just starting out, make sure to check with your state regarding your sales tax obligations, because some states are requiring the registration for the sales tax right away. Others are working with Amazon through the marketplace facilitator that is put in place. And most of the states are actually, if you're selling on Amazon, for example, or any other marketplace, most of the states have that already in place for you. But some of the states still require manual applying for the permit for the sales tax and filing sales tax manually. So that you would need to change in your Amazon settings to collect.
Oh, that's great. So thank you. That definitely makes a lot of sense. And I'm a huge advocate of, I always recommend setting up an LLC to start. I understand starting capital can be, different, but especially depending on what you have for personal assets, it's nice to have separation, not only for legal purposes, but also for accounting purposes as well.
Yes.
And I myself am not a lawyer or a financial professional. So, So, in the first while, if you put those things in place, what are kind of the pitfalls that people should look out for with, let's say you have an LLC, you have a separate, business account, you have a business credit card, all of your finances are separated out, but when they're tracking their expenses or when they're looking at, revenue coming in from sales, and especially, just actually looking at their spreadsheets, profit loss statements, what do you typically see are what people get caught up in, especially in the beginning?
So in the beginning, most of the people get caught up in the system that they need to put in place. So they're not sure how to track it. Some people would start with Excel spreadsheet. Some people would start jumping into expensive software. So what I recommend at this point, when you're just starting out for the first few months, you would use Excel spreadsheet. If you can afford it, then I would recommend to go for the formal accounting software such as QuickBooks or Xero. That is actually better than going for something in between such as bench.com or Wave, because those little guys just don't work as well for e-commerce businesses, even though it's a little cheaper, I would say. But
Sure.
yeah, it would just work out in the long run. It will work out better if you start on the formal software. Then, so the general idea is to get either, if you're starting with Excel spreadsheet or with the formal software, the general idea is to have your gross sales tracked and your expenses tracked. So your expenses would be the marketplace fees, your payment processor fees, and other business expenses that you incur along the way, your product purchases and shipping and all that. We'll get into that in a little bit. Also, what's important, what I notice a lot of businesses don't do is track their inventory. They just don't have the system in place. And they should, if you have 1 or 2 SKUs, that's okay, you're starting out with that, right? But if you have multiple SKUs, and some people start out with that because they're doing some type of online arbitrage or something, so they have lots of products and they just get lost in that. So in the first couple of years of business, definitely in the very beginning, actually, not just in a couple of years, start putting together some type of inventory tracking system. So if you'd like, I'll share with you some of the other software.
Sure. Absolutely.
Okay. For the inventory, since we're already talking about it, for the inventory, if you are selling in North America and only on Amazon, the Inventory Lab, I would definitely recommend. Most of my clients are on Inventory Lab. I'm not affiliated with any of this software, just to let me know. This is from my experience and what my clients use.
Sure.
If you are going out to European market or any other global markets, then it's going to be Inventory Lab would not work for you as well. In that case, you would use different type of software. But to start out, the Inventory Lab is good. So that's in the first couple of years. I want to mention for the Amazon sellers and for Shopify sellers, there is a nice software that integrates with Amazon and QuickBooks or Xero. That's called A2X. Most of my clients are on A2X. It just lets you track, from accounting point of view, it will let you track the payouts, your settlements, and also it will take care of cost of goods sold, which is very important for accounting to keep track of.
Absolutely.
Mm-hmm.
Yeah. And so, I mean, I know, let me ask you this question. When you're getting started, right? So reaching out to, do you feel that it's beneficial to reach out to a CPA? I mean, especially once you start getting some revenue, let's say the first couple months, okay, maybe you're just getting off the ground and going, and you're using, personal funds to, actually have capital to drive your business forward. But once you start yielding a profit and you have it, say, an Excel spreadsheet, I made the mistake personally when I first started kind of doing this. And in the e-commerce world, that I didn't necessarily track everything up front. So I tried to go back, 6 months, 8 months, 10 months later, and it was a nightmare. So I had to, go and I could find, my credit card statements, then I had to find receipts that match them and things of that nature. So, what, from your standpoint, what do you offer for people that are just getting started, to help them set up, put a system in place, anything like that, from your end?
So from our end, we would offer, of course, to form the business correctly with the right entity in the right state, and set up their accounting systems. As I mentioned, it's very important to start tracking. Otherwise, you wouldn't know your numbers. You wouldn't know if you are making or losing money, and which products are profitable, and are you really making money after all the expenses are out. So because you might not know all of those. So what the common mistakes that I see is 2 types of mistakes. One, assuming that Amazon or any other marketplace is tracking that for you already. So you could just pull up gross sales from your Amazon account. You could do that, but they don't track your expenses. They just track the fees and just a little bit. They just touch on a couple of expenses, but not all of them. So you would need to know, in order to know your numbers, you would need to know all your expenses and all the deductions that you can take on the business. that's for taxes. Actually,
Sure.
that's related to taxes already. But in order to start, so you need to basically have a system in place. So it's definitely best to reach out for help if you are not, you don't have the background in accounting. So another type of people that I see is they don't have the background in accounting, but they think they can do it all. So they go in, they try to search how to do it on their own, they set it up on their own, and it's in the end something is not adding up and they can't figure it out. And it's just in the end they still need to clean up all that. They would need professional help to clean it all out, because e-commerce business is very specialized, and it's best to have it set up correctly, and then concentrate on what you do best, your own business,
Well,
get the numbers correctly.
that's my thing, is the time, right? So, I could probably go and really learn it in and out, but I would rather focus on scaling my business and growing my business and delegate that out to somebody else rather than learning the art of that on top of everything else as well. So I would agree with you there. I think just from a time standpoint, especially once your business is profitable and it's doing well, then I would go and actually seek, actual financial professional help. And even if that's just a quick consultation, it doesn't need to be this full-fledged thing. Sometimes it needs to be, if you do what I did and you're going back, a year and there's a bunch of your accounting's a mess. So let me ask you this. So we're coming up on tax season, and as an e-com, business owner, what do you want come tax time? What records do you need to prepare? What do you need to have in place? And then also, as far as if you can speak to, what are things that you can write off potentially if you have the correct documentation? Because one of the advantages of being a business owner is that you can actually leverage, some of your expenses and things of that nature against the actual earned income. So if you could speak to that, it'd be awesome.
Absolutely. So what I would need, first of all, is profit and loss statement. So I would need your financials. Profit and loss would include the summary of your gross sales and all your expenses. I would need the summary of your marketplace fees, your payment processor fees, if you have any, and other business expenses. So I can give you a few because there are so many of those. So you can write off your car expenses, your utilities, your office supplies, shipping, home office expenses. And that's just to name a few. There are a lot of little things like packaging, design, outsourcing. So I would also need the balance sheet. And so these two statements, if you can put it together yourself, great. Most of the time, people are having difficulties putting it all together, or they just don't have time for that. So what I would need in that case is your bank statements, your credit card statements. You would need to put it all together, or you have somebody like our firm, for example, put it all together for you.
Sure.
You would need your Amazon summaries report, and also very important is coming back to the inventory tracking.
Yeah.
Very important is to have your inventory numbers, your beginning inventory, what you started with, your purchases during the year, your cost of goods sold. So cost of goods sold is how much inventory you sold, how much it cost you, that inventory, and your ending inventory. So if you're just shipping directly to Amazon and Amazon is taking care of it for you, maybe you can get away with the Amazon inventory reconciliation report that they can prepare. You can pull it from Amazon, but you also need to keep in mind if you have some goods in transit that might not be there. If you have a warehouse, you need a separate count of inventory there. So it's very important to do that even like during the year. It's really ideal to have that because it's hard to go back after that and count your inventory back a year ago.
Yeah.
So also you would get your 1099K from either your marketplace, from Amazon, or your payment processor, PayPal, Stripe. So they would issue 1099s if you're at $20,000 in gross sales or more, and you had 200 transactions or more. So you would get a 1099. But even if you don't get 1099, you still are obligated to report that income.
Yeah.
So don't think that if you didn't get it, then so some people are actually making mistake of recording or tracking their net sales after all the fees came out, in that what lands in your bank statement, and not reporting the gross sales. And in combination with not comparing that number with your 1099, that would trigger an automatic review by IRS. So you would need to definitely compare and reconcile your numbers, your gross sales that you're supposed to be tracking during the year, or you have at the end of the year, with your 1099. So reconcile that and make sure that is close, or it has to actually match. So that's very important. Mm-hmm. Oh, and also, so what I wanted to touch on is some people have an LLC and they have more than 2 members of LLC, or more than 1 member, so 2 or more. In that case, they would need to file a separate business tax return. But if you're a single member LLC or a sole proprietor, then you are filing this business return on your personal.
Right.
So that's something that I don't know. Mm-hmm.
So let's just say hypothetically, when you're actually looking at a lot of these, so from one thing, so too, I mean, when it comes to writing stuff off, I mean, like you're talking about all of your expenses, obviously you'd want to pay for those with your business account, business credit card, things of that nature to track those expenses, not your personal, because as you said, commingling makes a mess of things. But also, so I mean, like even your accounting software, so let's say QuickBooks, at the end of the year, you can write that off because it's something you've used for your business.
Absolutely.
So, I'm just trying to give it, whoever's listening, it's one of those things that, yeah, you're paying for it up front, but you're going to get that back in theory, that you're not going to pay tax on that actual, revenue earned. It's an advantage in that way. With the income that you have though, so let's just say it's sitting in your business bank account, you haven't paid yourself personally, and you have 2 or more people in your LLC. So how is that taxed differently? Because I've been asked this a couple of times, because they're like, well, I need money for inventory, coming up for following year, or whatever else too. They wanted to keep it there for PPC and other expenses moving forward. But they don't want to, obviously they don't want to pay themselves from that. So they're retaining money that they've earned a profit from, but it sits in a bank account. What do you end up actually, like, how is that handled?
So if you are a partnership, like let's say if you are 2-member LLC or more, you are technically filing as a partnership. So you're filing a business tax return as a partnership. Sure. So in that situation, that income that you made, the net income, your business is not paying taxes on on that income, but it's you issuing each member of LLC a K-1 form, which is the net income that you made from your portion of this partnership or LLC, and you are filing that form with your personal tax return, and you are personally paying taxes on that. So it's called flow-through entity. Mm-hmm.
Okay, yeah, that's what I assumed. I just wanted to kind of put that out there. When it comes to taxes, I mean, what do you see as some of the biggest mistakes? And again, I guess this probably really goes back to tracking, right? If you have everything laid out and you have a good system in place, it can save you a substantial amount of money come end of the year and tax season. When you don't, obviously, if you can't prove certain expenses, if you haven't tracked stuff properly, it can be very costly. And I personally know this as well. So if you don't mind, what are the most common things that you see? I mean, aside from, like, if it's tracking, but like what part of tracking, what are people not actually doing specifically?
Okay, so part of tracking, so basically many people don't think that they need to keep receipts. They think their bank statements and credit card statements are sufficient. That's not true. So you need to have the actual receipts in place for every expense and every purchase that you make. And that's a requirement by IRS. So what you need to do is to just have a system how you would put that in place. You don't need to keep paper receipts. You don't need to have it on paper. You can just digitally store it. You can take a picture of your receipt or save the email. Just keep it all in one place, because it's very hard for you to go back after that. And especially if you get, God forbid, you get audited, and then you need to put together, reconstruct your records and find all your receipts. And it's hard to go back 3 years back. IRS sometimes goes back 3 years, and then you have to find all those receipts. Chances are you won't have those receipts, and then it will be disallowed. Those expenses that you wrote off will be disallowed, and you will be in trouble. Like, you will have a huge tax bill on your shoulders, which should not be if you kept those receipts. So that's very important. Don't assume that if you have bank statements that covers it. No, you need to have the receipts. And yeah, that's very important. Also, common mistake, like I mentioned that before, but just mentioning it again, that you need to report your gross sales and reconcile that with 1099, because that's what IRS gets. They know, based on your 1099, they know how much you made. So if you report what's landed in your bank account, that's going to be under reporting, and it happens all the time. So I have clients coming in, they just bring me this IRS letter. I don't understand, why did I get that? Well, it's on your 1099, and they didn't even know about the 1099 was there for them because it didn't come in the mail. So make sure to access your tax documents in your marketplaces and payment processors. And of course, inventory. Again, very important is to have your inventory correctly, because when you file your taxes, the tax return, on the tax return, you're filling out your beginning inventory, your purchases, your cost of goods sold, and that might include like shipping costs and your packaging costs, anything related to getting your inventory into the door, and your ending inventory. So these 4 numbers are very important. Any of these numbers are incorrect, it will flow incorrectly on your tax return, and it may raise the audit risk, or it's just going to be a wrong audit tax return.
100%. Well, Julia, thank you so much for being willing to do this. And I learned a few things. I think everyone else watching did as well. What would be the best way to reach out to you? I know we're coming up for tax season. People want to get stuff prepped. I like to have it done well ahead of time, so I don't have to worry about it. What's the best way to find you?
So I'm on Facebook. I have business page, Julia Ibrahim CPA. I also have website, allunitedcpa.com. I'm on LinkedIn. That's about it. The best way, I would say, Facebook Messenger. You can just send me a message. I'm very responsive, and I'm ready to help.
Awesome. Well, thank you very much. I really appreciate you being willing to do this and share your knowledge with everybody.
Thank you for having me.
All right. Thanks.